Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the massive dump on the Bitcoin chart as well as the stock market as the Federal Reserve has, of course, increased interest rates 75 basis points, which I did suggest you should expect a pullback if it was 75 basis points. So we absolutely nailed that call. We did dump to basically a support on a kind of flag. Now, we did have a bit of a triangle going on previously, but what happened was the volatility of the market ended up building a bit of a flag structure here. And so we did catch ourselves on this very thin ribbon, but very significant level. So we didn't have a catastrophic breakdown. Now, the reason for the harshness of this dump in the traditional markets and elsewhere is basically because Jerome Powell went far more aggressive than he had to in terms of his rhetoric. So he really disciplined the market. He really slapped the market down from its exuberance and made sure that nobody was talking about a Fed pivot, all of that nonsense, which is exactly what I explained in the last couple macro Mondays and the dangers that we face here, guys. And so as we look at the Bitcoin chart, you can see, well, of course, 75 basis points was pretty reasonably expected, so we don't have to, be panicking or anything. It's just that the market enthusiasm has been taken away. And so investors may not really be sure what they want to do next. Are they going to bring it down and kind of just wait until December to see what they want to do? Or are they just going to send this thing and try to prevent the kiss of death, which I mentioned in the last Macro Monday episode? Please check out the Macro Monday episode if you're interested in protecting your assets, because that's a very, very important episode. Please check out the last episode that's entitled Macro Monday, The Kiss of Death. It is significant for you. Guys, as we go ahead and take a look at this chart, I think I'm just going to keep it simple today because, we kind of had the wind taken out of our sails. We didn't get the skyrocket that many people were hoping for had it been only 50 basis points. Jerome Powell did no favors to Biden for politics. This was the worst possible meeting that could have happened unless he took the extraordinary step of raising 100 basis points, which was not going to happen. And so this is just absolutely traumatic for the markets. It was a gut punch for them. Okay. Let's go ahead and look at the momentum pools. Of course, we do have several momentum pools that we've just been tracking as the days go by. Each one of them is 1 day, a calculation. And then occasionally I make these white boxes, which are 2 to 5 day estimates, basically projections of where price could go to. And you can see we got on top of this alpha momentum pool here. We didn't go swimming in it. We just sat by the side of the pool, just soaking up the sun, getting that vitamin D. We had a nice pump. Of course, we did reach some limitation in resistance in the market. And then, the 2 to 5 day projection suggested that we could chop as low as a 20,300-ish. We actually ended up hitting that level almost precisely, so absolutely killing it there. We then swam around in the next day's alpha momentum pool. We were not able to capture the top of that. We didn't close a candle completely above it, and so our toe was still in the water. We went back swimming around. Basically, we did get a candle up here, but this 4 hour candle, it just wasn't convincing. It wasn't like a 1 day candle or anything. It's just one 4 hour candle. Ideally, you get two 4 hour candles, okay? Because that's only 8 hours. We're talking about daily momentum pools here, okay? So that's only 8 hours. We went back for a swim. We're not able to capture on top of that one. This was the Fed meeting day, actually. This day has now closed, but since we've basically just been swimming in the pools here, right, you can see that nothing too interesting has been going on. There was no obvious setup except for these candles right here. Boom, that was the absolute killer candle. And then when we broke back down into the pool, then boom, we came to our 2 to 5 day projection. For these ones, it's just sideways action. We did close underneath this one, but I had already given you the same level, so there was no need for an update. The same level from the previous day to break down, and boom, yeah, we absolutely did break down to this kind of a diagonal support that got carved out here by the price action. And so, just if you want to understand how momentum and price action have been moving together, essentially that's what's going on. Now, the new momentum pool for the next 24 hours, and this is actually good for I believe the next 23 hours, is this dark blue momentum pool here. Now, what we can see is that we're starting off on the right foot. We're at least pushing up into it. We're not dropping below it. So our momentum is starting out on the right foot. And what we'd like to see is to get above the momentum pool, at some point by tomorrow afternoon and close above essentially 20,355. So it's pretty similar to the bottom level here. We're basically going to try to recover these candles. If we can recover those candles, then we will have recovered our momentum, and then for the next 2 to 5 days, we can try to see what we can make out of that. And if we can hop on top of 20,500, which is essentially the top of the momentum pools for the last couple days, then of course we're going to be in a good spot. Potentially, once again, at least in terms of daily momentum. Now, there are some other considerations, for our stochastic, we're still probably going to be turned down underneath 20,800. That could be updated, so it's a little bit of a lagging indicator. So I will keep the limit here. But in terms of signals, I do have to keep those things in mind. So if I bring out some good old alpha momentum signals over here, this kind of just a signal scale, then just in my estimation, based upon calculating 4 different types of momentum over 5 different time periods and taking into account EMAs and also our volatility along with the price action that we have going on here, then in my estimation that we are going to be fairly bullish above 20,810. If we can recapture these candles up here, then most likely we can have continuation to the upside. And this level is again critical for our daily stochastic. So this is a tough goal because of how far we've been pushed down, but you can see that the price action has been able to move in these pretty broad swings. So it's definitely doable, okay? We just get on top of there. This becomes a bull flag essentially, right? And then our measured move would be up to the next level, somewhere here around 22,000. And I think that's very highly plausible. The only problem is that we have broken some of our momentum structure here, and we are building a bit of a bearish structure as well. This looks a bit like a head and shoulders to me. And so you do have a measured move that could kind of bring us down into this really critical danger area around 19,000. Let's just say $500. I'd be pretty wary. However, we could just be recapturing some liquidity from these naked candles that could be retested, and then perhaps we just go on our way, right? Something like this. And so this could be just a liquidity grab still, which I did mention in the last episode as highly possible. If we do take a look at our bullish level, I think that we have a fairly good shot above 20,480. Of course, that goes along with our alpha momentum pool. So, these things work together. Of course, it's not like separate systems. This is actually an extension of the signal system that I'm developing here. And then, of course, you might be able to front run that bullishness at around 20,375, but it's at your own risk. And then you could also front run bearishness under 20,150 here, but again, it's just at your own risk, okay? And then I would be officially bearish at 19,906. Where I do think that we would be exploring, the downside to grab this liquidity, or potentially just to capitulate or something. Okay, and of course, the reason why we could capitulate like that, which is something I haven't been talking about recently, but if we go over to our volatility, you can see that our volatility was supposed to be a fairly substantial move. It did end up fizzling out because of the Fed, and so this thing could turn back around. But whenever you have a volatility flip, it's always possible that the price action flips to the downside or to the upside. The price action itself could flip. So remember, volatility is direction neutral, and so um, you know now that our expansion and volatility to the upside has pretty much ended, right? That's what this signifies. It's ended. Then a new volatility era is just kind of consolidating. And when it starts expanding again, we don't know if it's going to expand up. Price action is going to go up or down. We only know that volatility is going to explode up. Okay. And so, guys, just be aware that we could have some unpredictability coming up related to volatility. And if I do go to the 2-day, right, then we can also take a look at that volatility that really hasn't exploded yet, and it hasn't pinched off. So the fact that we're pointed to the downside while this 2-day is starting to explode and starting to reach basically that 10% threshold, it just really this is dangerous. Okay, this could explode to the downside. So this is actually expanding while price action is moving to the downside. And I do like that it's curving, because that could suggest that it's not really fully initiated yet. You understand what I'm saying? Kind of like these kind of little wobbly moves, and then it went. So we're just on the lookout for this stuff, guys. Okay, we have to be highly aware that we do have a lot of low volatility, like on this 3-day, which hasn't even. I mean, it's just barely started to tick up. But again, price action is moving to the downside. So we really need to recapture some of that momentum if we want volatility to explode in our directional favor to the upside, okay? I mean, unless you're a bear, in which case, you suddenly have a chance again, guys. So let's go ahead and go to the EMAs, just because it's been a while since we really checked those out. Let's go ahead for the daily EMAs. And you can see, there we go. You can see that we are fairly bearishly postured here under the 9 EMA, but we're above the 21. So this could be just a bullish check back. I mean, if we just recover these, levels that I've marked out here, then this could just all be a nothing burger, right? And so again, like these two levels here are critical, and you can see how they surround the 21, and also how it kind of this is like the interception level for the 21 simple moving average, and this is the interception area for the 21 exponential moving average. And so these are very highly relevant areas to be keeping above if we want to maintain that potential for just a bullish check back on the daily. But if we do go over to the 5-day, which I do like the 5-day because it can be a nice substitute for the weekly, a little bit of a front run on those really big moves, you can see that we did something quite interesting. We came up here, we tagged the 21, and then we came back to the 9, And essentially, we're just, bullishly checking back on a squeeze play, which if we did pop back up to like 21,200, and then we're able to grab above 20,000, that 20,500 level that, is my bullish threshold, and then we pop up again above that kind of uber bullish level, then we could be in a squeeze play all the way up to, retest maybe this 300 EMA on the 5-day, or maybe even the 200 EMA up here at 26,000, or at least like this 35 or the 50. So there's a couple levels that we could really be looking at in terms of EMAs on these 5-day plays, as we see that this squeeze is still technically active, okay? And while we do have some, odd, stray 21 simple moving average working against us, it is possible to get around that, okay? And so we're going to keep monitoring this, and I'm not officially bearish yet, okay? Like we are hanging in there, and as I mentioned, 75 basis points increase could just be sideways action. The market hasn't really chosen yet which way it wants to go. Let's go over to the weekly, and on the weekly, you can probably see the same thing as the 5-day, except with the one huge exception is that we got underneath our 200 simple moving average again. And that's not good. That's this orange line right here. We don't want to be under that line. That's why, and I'm just looking at now, but that's probably why like a lot of this momentum is lining up for bullishness above 20,500-ish, because again, like we have that 200 simple moving average there, and you really want to be on top of that. If you're underneath it, then what you could see is happening. Okay, let's just like zoom out a little bit here. We dropped down, we bounced off of our 200 simple moving average, which is a really important long-term moving average for markets. Okay, we retested it and broke through it. And then what could be happening is we're retesting the underside of it after retesting the top side of it and losing it. And then if we actually lose it from the bottom side, then that could suggest that we have further down to go. Do you see how that works? This is our 200 simple moving average. We hit it, we retested it, failed to hold it, broke down under it, bounced off the 300 simple moving average, came back up to retest the 200 simple moving average, and if we don't hold that, that's bearish because it suggests we could continue to deflect to the downside, okay? That's the narrative that these EMAs are telling me and why EMAs are so important. Now, what we do have here is kind of our big brother just kind of backing us up, which we have the this little thin a line here is the 300 EMA. And so, pardon me, it's not the simple moving average, it's the EMA here, this white one. And that's it's, oh no, I think this is the simple moving average. I do believe I updated that. Yeah, that's the 300 simple moving average. And by the way, if you guys want to use the same EMAs that I'm using, you can go ahead and take a screenshot of this, and then we can be color coordinated. So if you ever want to look at my charts and then make yours, there's a couple groups that use very similar color coordinates for their EMAs. And so if you'd like to join me and my friend Retta and some others in this type of color coordination, it just makes the community easier to communicate with each other. But anyway, guys, as you can see, we are bouncing off of that 300 simple moving average here, and then we bounced off of it again, and then we bounced off of it again. And so if we do break down and we bounce off of it again, then, that could be acting again as our big brother and just like sends us back up again. Or, we would, if we lose that 300 simple moving average, that is going to be pretty disastrous. But you can see that that level is around 18,000, essentially our range lows here. So, but expect it to give a little bit of resistance, okay? It's been giving resistance, so it has been our friend there. But a bearish retest of the 200 simple moving average would not be a good thing. It would say that you're under the market long-term average, and that's not good. If we do get on top of it, of course, that's bullish. Okay. Let's go ahead and just take a look at, well, we did get price action where we have this flag. We did get our EMAs, we did get our momentum, and we did get our volatility. So I'm going to wrap it up there. This episode's been long enough. We do want to make sure that the stock market stays healthy. Otherwise, we could have that kiss of death. Please watch the previous episode called Macro Monday, the kiss of death. It is very important just for your long-term planning, just in case the stock market doesn't get above that monthly 21. Okay, well, we have some time. We can play these ranges and all that, but just be aware of what we might be coming up to if the Fed doesn't pivot. And if the hardliners and the hawks win in just bringing this market down, okay? All right, guys, that was your alpha for the day. Stay safe and happy trading.